Okay, what are you saying, people? Welcome back to your favorite YouTube channel. So today, guys, I've got the best Forex continuation pattern for you. I've got three good examples, one in EURUSD, AUDNZD and EURNZD. I'll be breaking it down, showing you why it's such a good pattern, how you can use it in your trading, how you can increase your win rate using that pattern as well. So I'll be breaking all that down and just hope that it provides some value and you can take something away from this video. But yeah, before that said, guys, let's get straight into it. Okay guys, so welcome to the chart. So on my screen I've got EURUSD on the daily time frame, and I'm just going to talk you through, like I said, the best Forex continuation pattern. We've got examples, like I said, on AUDNZD and EURNZD as well, but we'll start with EURUSD. So best Forex continuation pattern simply shows us when people are entering the market too early to catch the reversal of a trend because they think it's hit the climax, think it's hit the top or the bottom. They look to get in for the reversal, but you just see the market continuing the trend, another 100, 200, 300 pips. We see that all the time. So the pattern, indicates to us when people are getting excited for the buys, just to see that the market continues in the overall direction of the trend. And we have a great example of that on EURUSD in this area here. A very strong wick to the upside, price came back down from the shooting star, and you can see the market rolled over. Now, shooting star is a simple candlestick pattern, yes, but in this scenario it doesn't happen too often, but when it does, it's a very, very powerful pattern. And you can combine this with other technical tools like fib, trend line, support and resistance, moving averages, you name it. You can combine it just to increase the win rate. But overall, what we've seen here, first things first, a lot of people do get confused with wicks because they either think wicks should be filled or wicks represent rejection. Typically speaking, a wick in the direction of trend is normally filled because that wick normally represents retracement. Now we expect a continuation. So for example, say we've got a bearish trend like this, lower lows and lower highs, market leaves a wick to the downside, we normally expect that wick to be filled and just see a continuation of that trend. However, if say for example we have another bearish trend and we get a strong wick to the upside and price pulls back aggressively, this normally represents rejection and that the overall trend is still bearish, and now we expect a continuation to the downside. So this wick will represent rejection, whereas this wick we expect retracement and then the continuation. So taking that into consideration with this pattern here, we've got a strong wick to the upside and price comes back down and closes bearish, giving us that strong candlestick rejection, shooting star pattern, and now we expect the market to continue. Because on the lower time frames, what we're seeing, 4H hourly, we're seeing strong moves to the upside. People getting excited. We've just seen some new lows in the market past this point here. People getting excited for the reversal, thinking that the market's getting ready to turn, seeing these strong candles, fear of missing out. They don't want to miss out on the reversal because it has been very bearish for quite a while, so they do expect to see a big relief in that. So a lot of people will be getting excited, entering a lot of buys, especially with a strong 4H candle like that, strong hourly candles, looking to enter buys, right at these highs up here, just to see by the end of the day the market has pulled back against them and giving us a big wick. And then you combine that with, like I said, other technical tools. We've got moving average here, 14-day moving average, very, very strong moving average. Big wick to the upside, just adding confluence there. We've got a nice trend line in the 4H as well, which price had a bit of a false break of. Again, people seeing the break of that trend line, buying into that. They get another trap to get people to enter the reversal trade too early, just to see the market drop and continue a lot more, getting a lot of buyers excited, and then overall the trend continues. That pattern happens many times, and just seeing this happen with a strong wick and then the market closes a shooting star, we do expect that drop. So when you do see that pattern that happen, the next day, well, this is the daily time frame, the next day, next 2-3 days, you're expecting bearish momentum. So all you're looking for is to drop to the low time frames, look for an area of resistance. Here's a nice area of resistance there if there's wicks. Drop to low time frames if you want to. In that case, you can obviously enter on that daily candlestick there, but if you want to maximize your risk reward, you can drop lower and then simply just wait for a lower high, retest of a level, and then the market will continue in that trend most of the time. Again, nothing's perfect, but the majority of the time, this pattern will play out. Again, it doesn't happen all the time, but when it does, you do want to take advantage of that. So let's take a look at our second example. We've got AUDNZD, strong pattern. Now this is using the daily time frame and the weekly. So I was using there the 4H hourly and the daily. Now I'm going to use the daily and the weekly to show this pattern. So here again, strong bullish momentum. You can see the market start to tire. It looks like we might have that reversal, getting a lot of shorts, being added here. A lot of people anticipating the reversal, looking for the market to come down after this strong move up. But as you can see here, if I go to the weekly time frame, it's giving us a big wick to the upside, a really strong hammer candlestick pattern. So this is the opposite of the shooting star. So we've got a wick to the downside and the strong bullish close there. And then as you can see, the market continued. Why? Because we saw rejections, big wick to the downside against the runner play, against momentum, and now we expect the continuation. Again, adding moving averages to it, trend lines. You can see in this case, we came back to retest this consolidation here. The market was consolidating for quite a while. On the daily, broke to the upside, came back to retest, and there we got our continuation. So just again, adding confluence to that, just to maximize the win rate of the trade. But even with the pattern alone, it's a very, very strong pattern anyway. And again, you want this to be against the run, against the direction of the trend. So we've got that bullish trend against the trend, and then we've got the continuations. You can see these wicks to the upside. Again, people get excited for the reversal, but all these wicks, we do expect them to be filled, whereas this wick, we expect rejection and the continuation. Again, similar pattern happened again this week. We'll see what happens in the next couple of weeks from that. But big, strong wick to the downside, closing a hammer stick candle. We've got about 8 hours and 50 minutes to find out. But after this, we're expecting more upside. These upside wicks to be filled and some new highs past that point. Maybe some new highs past that point as well, if the trend does continue. But very, very strong pattern that looks to be playing out again. And then finally, EURNZD, and this one I'm using the weekly and the monthly time frame. So again, this pattern plays out on all time frames, but typically speaking, it's better on the higher time frames because more the candles are more trustworthy. They're not affected as much by the lower time frames, by the constant fluctuation and news releases. NFP could just give two big wicks on either side. It can get a little bit confusing, whereas the higher time frames, they have the time to correct themselves and in line with the overall direction of the currency pair. So again, weekly time frame, you can see bearish trend in the market, lower low, lower high, lower high, lower low, lower high, lower low. Then we get this strong euphoric bullish move. Again, a lot of people are getting excited here. The reversals on the cards, we could be seeing price come back to those highs up there. We've broken through this resistance. A lot of things are pointing that the reversal is on. A lot of people will be thinking the reversal is amongst us, but as you can see, the market came straight back below that level, and by the end of the month, all the market did was just close as a nice bearish candlestick, bearish engulfing and shooting star as well for that big wick to the upside, and just holding on to that resistance. So again, a trap, getting people excited into those buys early. Big strong candle closure by the end of the month, and then the next month we see that drop. So again, higher time frames taking advantage of that. If we've seen this pattern here for this month, then we know the next month probably will be bearish, and we have targets at these lows. So all you want to do for the whole month is just be looking for sells. I know we did see a very, very strong drop here. The month opened around here and it just dropped. So obviously this was fundamentals playing its part, but from a technical point of view, we already understood the direction of the market. The fundamentals just provided that catalyst for us to move in that direction. And if you're just looking for sells throughout the whole month, you would have made some very, very nice profits here. So as you can see, a really strong, powerful pattern happens in all time frames. You can take this for day trading, you can take it to swing trading, but it's a strong pattern only in the direction of trend, not against the trend. For the reversals, only in the direction of trend, and I'm actually expecting this to go further, maybe to some areas down here. But as you can see, strong pattern here. Again, go back test it yourself. Anything that I do show you guys, in these videos, make sure you do go back test them yourselves, just so you can get the confidence within them before you do apply it into the live markets. But strong patterns, go and check it out yourself. I hope you have found value in this video today. If you do want to see more of these videos, let me know in the comments and I will get them out for you. If you are enjoying the content, like, subscribe, hit the bell, share, and yeah, do all of that, and it will be appreciated. But enjoy the rest of your day, and I'll catch you in the next one.